If you're here, you probably know I've bought over 2% of Ethzilla for just under $5.3 million. That is $16 per share. In this video, I'll detail why the company is selling for a 50% discount, what the market misunderstood, and what allowed this unique opportunity. For those of you unfamiliar with Ethzilla, it is a company focused on Ethereum with two parts to its business. The first is a digital asset treasury. In simple terms, it owns Ethereum and invests it in decentralized finance to generate a yield. When the stock trades at above what its Ethereum is worth, it sells shares to buy Ethereum. When it's at a discount, it buys shares back to increase Ethereum per share. This way, it converts stock volatility into net asset growth, in addition to generating yield, making it a more efficient way to own Ethereum than direct purchase. The second part of Ethzilla's business is the issue of tokens against private credit and real estate. What is that? Picture a stablecoin like USDT. Now, picture a coin linked not to a dollar, but to a portfolio of commercial bonds. Now, you have a dollar denominated coin that generates yearly yield on its own, compared to just holding USDT, which you need to loan out to generate interest. Ethzilla is also building solutions like this for real estate, where a commercial property becomes tokenized and each coin reflects a share of a commercial property's value and its rental yields being distributed to token holders. This is more than just theory. To build this out, the company has already raised $500 million to tokenize and has obtained all necessary SEC approvals and registrations for a token launch by acquiring 15% of Liquidity.io, a company and marketplace that is approved and registered with the SEC and provides all of the technical backend for tokenizing real-world assets like private credit or real estate. This two-business setup, whilst extremely promising, since USDC issuer Circle, for example, trades at 156 time earnings with a $30 billion market cap. This is also a key reason for investor errors in valuing Ethzilla. Ethzilla owns 102,000 Ethereums, roughly worth $420 million at the current price, as well as $560 million in cash, which are invested in treasuries, for a total number of assets of $1 billion. This equates to roughly $62 per share. Now, at the same time, the company owes about $500 million, or roughly $30 per share, in a combination of convertible notes and warrants, and a further $50 million on an OTC loan used for share buybacks. Now, taking the $62 per share it has in assets minus its liabilities, we end up with 62 minus 30 equals to $32 per share in net asset value. Very simple. On Friday, this was confirmed by the company, as it said the company's stock was trading at 60% of net asset value, meaning it was trading at 60% of the value of its Ethereum holdings, and 60% of 30 is actually 18, which was the closing stock price. This seems fairly easy. So why were people getting this wrong? The answer is surprisingly simple. In most updates on its DAT business, Ethzilla published only its Ethereum, leaving out its cash on hand. As convertible notes or long and complex documents, many investors didn't read them and just assumed they needed to dilute the share counts to get the net asset value. So they thought that they needed to take the 102,000 Ethereums, assume that there would be twice the number of shares that there are to close the convertible note, and that they needed to divide 30 by 2, got 15, and that was the stock price at essentially which I bought, around $16 per share. However, in doing this calculation, they simply forgot about the cash, about the $500 million of cash, actually $550 million, that was just sitting in treasuries on its balance sheet. This led to a mistake by a factor of 2. It seems like a stupid mistake, but if you check social media channels and see what people are writing, why they're not buying Ethzilla, you'll see this is one of the main concerns. So why did no one catch this mistake before? The answer is interesting. Ethzilla did an IPO. It took a failed company called 1-800 Life Sciences and invested over $400 million of equity into it, getting in the process 99 and some shares. This way, Ethzilla started publicly trading immediately. It also meant all of the trading history and previous financial statements of the failed business show up on Ethzilla's ticker, even though they changed the name. And since Ethzilla will file only its first ever earnings report on November 14th, its balance sheet and statements can only be compiled through company updates and SEC filings. Since this is a small cap, it means no analyst coverage, and retail typically doesn't want to read hundreds and hundreds of pages of SEC filing and convertible note documents to do the math. The error was, however, not immediately this large. It grew to this size because of an even more ridiculous error in the analysis and evaluation of this business. 2 weeks ago, Ethzilla performed a 10-to-1 reverse split. This means that for every 10 share that an investor owned, they received 1 share worth 10 times as much. So nothing changes. This was done to increase the price of the $10 threshold and allow institutions to invest into Ethzilla, as they couldn't below $10. This coincided with the appointment to the management team of 2 people with previous fundraising expertise from institutions. A fairly non-event that is slightly positive for the company. However, typically, reverse splits are done by failing companies, as they are often a sign that value has gone down, the share price has gone down, and they need to do a reverse split to regain compliance with an exchange or to create the illusion of a higher ticker price. Taking this rule of thumb, many went to look at the company's financials. Although, as we just talked about, when they went to look for them, they saw the financial of the previously failed business and not of Ethzilla, and sold. And there's actually a small percentage of the float that's short from that mistake. This sent the stock down since performing this reverse split nearly 40%, from $27 per share to around 15, 16, which was the floor where I bought. This created a total disconnect between the net asset value of the business. Forget about the value of the tokenization business, which is profitable, but just the net asset value. Some have also cited that there is an authorized share issue of up to $1 billion as a problem for the business. Now, this comes from a complete misunderstanding of how digital asset treasuries work. All digital asset treasuries have both authorized share buyback programs and at the market authorized programs. This is so that when the stock trades at a premium to the amount of Ethereum they have per share, they can sell stock and increase the amount of Ethereum per share. Because if they sell at a premium, it's accretive to existing shareholders, meaning the amount of Ethereum per share grows. If it trades at a discount, they buy back shares because it creates the same effect that the amount of Ethereum per share grows. And it's a critical part to how it converts volatility into net asset growth. So this is absolutely not something that can affect in any negative way the business. In fact, if either the share buyback program is triggered or the at the market facility, it's a bullish event. It raises the amount of dollars per share. To sum up, if you're to take anything from this, the combination of errors that gave this opportunity was a misreading of the convertible note, a misreading of what a reverse split means, and a misreading of how digital asset treasuries work. All of this combined means that today, and this was confirmed by the company's weekly report issued after the close of the market on Friday, that the stock today is trading for a 40% discount to the amount of Ethereum that the company owns. It also applies a valuation of 0 to its tokenization business, which has $500 million in assets under management. If you consider the convertible note debt as assets that they gave to manage, which I think you should, and consider the fact that the business is actually profitable. It makes around 10 to 12 million dollars in net profit per quarter for investing its Ethereum and investing its cash in treasuries. So there is absolutely no model in which you would discount the amount it has in net asset value to give an enterprise value. There is an upcoming catalyst in the earnings that come out on November 14th, which is when all of this data that has already been confirmed by the company in its update on Friday, that was in all SEC filings, but it will update on the company's balance sheet, income statement, financial statements upon, for the first time, its earnings on November 14th. In my opinion, the stock will therefore first trend to its net asset value of $30, or actually $32 at the current Ethereum price. And as updates are given on its tokenization business and superior yield compared to other digital asset treasuries, as they make a higher yield since they invest in decentralized finance and not pure staking, the stock, in my mind, in the short to medium term, is likely to grow towards a target of $60. That having been said, the numbers could be better if management were to accelerate its share buyback program, which would grow assets per share and is something that management needs to do and has to do and has a fiduciary responsibility to shareholders to start doing. You would think that these opportunities are strange. How could it happen that someone on the internet find out about this, that it turns out to be true for a second time in a row, and no one else noticed? The reality is that this situation occur all the time in small cap stocks. The reason being that there are almost no financial analysts covering small cap stocks. And whenever there is a complex financial event like a convertible note, a warrant, or some other type of funding that's not straight equity, until the company reports on it in its earnings report, there is very little interest or analysis from retail when it comes to those SEC filings. And even if in this year, this is the fifth time that I've seen something like this occurring, for anyone that can see my Reddit archive history.